Hi, welcome to the Market Alert for Thursday, the 15th of December 2022. So FOMC hikes by 50 basis points, hawkishly signals rates will go higher for longer. So that screwed the market. They were expecting a pivot. US stocks ultimately finished lower after the Fed delivered a widely expected 50 basis hike. And SPX falls sub 4K, hawkish dot plots, but bonds disagree. So the bonds are pointing to a pivot, but the stock market's not. Powell opens the door to higher inflation target as part of a longer term project. That's poor communication. If you're willing to change the inflation target, you signal it can be changed more than once. The irresponsible talk risks unanchoring inflation expectations. So basically what we're talking about here is higher inflation prospects. And talking of interest rates today, we've got... let's just check the times on this. It doesn't seem right. There we go. That's more like it. Yeah, midday MPC rate rise, half of 1% for the UK as well. So nothing until 12 p.m. But then we go over to Europe for the refinancing that you can see there. And then over to the US for core retail sales, Empire State, and a few others, and then we've got a press conference at 1:45. So a lot of news from midday till 2 p.m. So let's have a look at the market's reaction to yesterday's 0.5% increase, and kick off with the Dow. So in the Dow yesterday, you can see the market, it moved higher and then was slammed lower with the news, and then overnight the market's still sitting above the 20-bar moving average, having digested that 0.5% increase. You can see the market moving up nicely to begin with, then slammed to the downside. Just have a look from the high down to the low yesterday. It was a 710 point drop between the high and the low following the actual news. So it's a big move to the downside. That said, the market came back above the low, as it always tries to do. And you can see at the moment we're just sitting under the DP, and then we've got the high back there about 400 points above. In the German DAX, narrow range for yesterday. In fact, it was incredibly boring, and even when the news came out last night, didn't make a lot of difference, to be honest with you. So nothing yesterday. Did a few trades, a couple of losers, and then decided to stand aside. And hopefully today we'll get a bit more action. In the 30-minute chart, you can see that we moved down. It was a long, slow grind down, and that's not a big move at all. Looks like it is, but it's not. Market moved back for the FOMC, all the way back to where it had come in the morning, and the market then stuck in a sideways range overnight, which you can see at the moment needs to get back above the DP. Moment it's finding support at the close, where it's come off these levels a couple of times after being oversold. In the 5-minute chart for yesterday, as you'll see, it was just tedious. Just stuck in a range. One of those you had to put the trade on and leave the screen, because it was just up and down, and it's to be expected given the sort of news you're expecting yesterday. Then we had a move to the upside at midday. They brought the market back. It was oversold, and then brought all the way back up. Again, choppy, very choppy sideways action with the odd puncture to the upside, and then there's the reaction from the news, which is only 100 points for the DAX. Then back to the close, 200 MA, and then sideways. And overnight, you can see the market's trying to make its way back at the moment, but very quiet indeed. S&P, well, as it said in the headline, it was sub 4,000, but at the moment you can see it's gone back above 4,000. Sideways, still below the 200 MA and 89 that we had a few weeks ago. 30-minute charts, again, sideways in the pre-market. Market moving higher during the official times, and then all the way back down to Tuesday's low, and the market finding support there. It needs to go above the close and the DP in order to move higher. In the UK, inside bar, quiet day, same as all of the markets yesterday, inside bars, and then the market's reaction overnight is just a paltry sum of about 30 points there. So at the moment we're above the DP, showing some strength there, but of course Bailey at midday, and then the rate rise also, which is looking to be also 50 basis points, 0.5%. In the currencies, interesting day for the GBP JPY, moving to the upside as the dollar also gained yesterday. You can see there in the morning, but then moving higher. Then the news from the Fed, and this just sent the GBP JPY higher. At the moment, the market's above yesterday's close, and the high is a stone's throw away. It'll just need the dollar to move prices higher. In the pound, also moving higher as well, but down overnight. Amazing, really, given that the dollar moved up last night on the FOMC. It shook the pound out, but then moved back up. Maybe that's because it's weighting the 0.5% in the UK. Yesterday morning, off the DP, back to the close of Tuesday, and then moving back up, and then double top, and then making its way down. Needs to get back above the DP close and the recent high. And in the dollar, this is a 30-minute chart, so you can see the dollar's reaction to the FOMC announcement. So we were up, we were down, and just slightly up overnight. This has had an impact on the metals market, which I'll show you now. Kicking off with silver, it's been monkey hammered down overnight. Overdone in my opinion, given the small move that we've got to the upside in the dollar. Let me just go back to the dollar and change it to a daily chart. As you can see there, it's negligible, and it ended up lower as well. And yet the silver price has been hammered on the overnight, as you'll see from the 30-minute chart there. Saying that, it's only about 60 cents. A real good monkey hammering is $1 to $2, which we've seen many times before. So holding quite well actually at the S2. And when you look at the daily chart, it's quite negligible given how far the market's actually come. Down from $17 up to 24 at one point this week. In the gold market, also down, but not as much as silver. Hopefully it'll find support at the 200 MA there. And again, you can see the market's reaction to the 50 basis points. But overnight also had a slam of $150 there to the downside, getting it back below that $1,800 mark, which is the goal of the central bank. So they continue to buy more gold, which they bought record amounts in the last quarter, as you saw in last week's market alert. So there we go. There's a quick roundup of the market's reaction. Let's see what it is today with the Bank of England, and if the market's got the legs to continue to the upside. It's going to look a bit like it's going to have trouble doing that. Personally, it might get into a bit of a range, I suspect. Okay, that's it for this one. As ever, thanks for watching. See you in the next.